You get paid. The notification appears on your phone. For a second, the number looks good. Maybe it's bigger than it was 5 years ago. Maybe you fought for a raise. Maybe you changed jobs. Maybe on paper, you're earning more money than you have ever before. And then life starts taking its share. Rent, insurance, groceries, gas, subscriptions, student loans, credit cards, the phone bill, the car payment, the things you forgot were on autopay. And a few days later, the number that looked good starts to feel strangely small. This is one of the most confusing feelings in modern financial life. Your salary goes up, but your life does not feel bigger. Your income changes, but the pressure comes back. So why does your salary feel smaller every year? The simple answer is inflation. But inflation is only the surface. The deeper answer is that your salary is not really what you live on. You live on what is left, and what is left is being squeezed from every direction. That difference matters, because a salary is just a number before life touches it. It is the number of the job offer, the number on the payroll portal, the number people use when they compare careers, cities, promotions, and success. But your brain does not experience a salary as a number. Your brain experiences a salary as space. Space to pay bills, space to save, space to make a mistake, space to say yes or breathe. And when that space shrinks, the salary feels smaller, even if the number is technically larger. This is where modern money becomes strange. Most people measure their income against the past version of themselves. I used to make this. Now I make that, so I should feel better, right? But your paycheck is not competing with your old paycheck. It is competing with the current price of your life, and the current price of your life keeps moving. A grocery cart does not care what you earned 3 years ago. Your landlord does not price rent based on how hard you worked for a raise. An insurance premium does not pause because your budget feels tired. The world reprices itself around you, slowly enough that you adapt, fast enough that you notice. That is why this feeling is so hard to explain. If one bill doubled overnight, you would know exactly what happened. There would be a villain, there would be a moment, there would be a before and after. But most financial pressure does not arrive like that. It arrives as small increases. A grocery trip that costs $12 more than you expected, a rent renewal that quietly adds another $100, a car insurance bill that no longer looks like the old one, a streaming service that used to be cheap, a phone plan with a new fee, or a medical bill with a number nobody explained clearly. Each change feels survivable by itself. That is why it works. The individual increases is small enough to tolerate, but the collection of increases changes the shape of your life. This is the first hidden mechanism. Your salary does not shrink in one dramatic moment. It gets surrounded. In May 2026, the Bureau of Labor Statistics reported that consumer prices were 4.2% higher than a year earlier. Food was higher, shelter was higher, energy was much higher. Those categories matter because they're not decorative. They're not luxury spending. They're the floor of modern life. You can decide not to buy a new jacket. You can skip a vacation. You can wait on a new phone. But you still need somewhere to live. You still need food. You still need electricity. You still need transportation. And when the floor gets more expensive, every paycheck has less room above it. This is why inflation feels personal. It is not just a statistic. It is the feeling that the same habits now require more of your life. The same apartment, the same commute, the same breakfast, and the same basic week, but more dollars. No new freedom. And housing is the biggest piece of this. For most people, housing is not just another line in the budget. It is the line that decides what the rest of the budget is allowed to become. If rent takes too much, everything else becomes a negotiation. Food becomes a negotiation. Savings become a negotiation. Healthcare becomes a negotiation. Even time becomes a negotiation because cheaper housing often means longer commutes, worse locations, or fewer options. The Harvard Joint Center for Housing Studies described the 2026 housing market as stuck in persistent affordability pressure. Sales of existing homes were near 3-decade lows. Cost burdens were still climbing. And in March 2026, only about 23% of for-sale listings were affordable to households earning $70,000 or less. In March 2019, that share was about 49%. Think about what that means. The salary that once sounded middle class doesn't open the same doors anymore. The number may still look respectable, but the doors moved. This is the second hidden mechanism. A salary is not only measured by what it can buy, it is measured by what it can access. Can it access a home? Can it access a safe neighborhood? A childcare? A healthcare without panic? Can it access a mistake? Because that is what financial comfort really is. It is not just having money. It is being able to absorb life without everything collapsing. But modern life has become very good at removing that absorption. A paycheck is now claimed before it arrives. This is the part that feels different from the past. Not because people never had bills before. They did. Not because debt is new. It is ancient. Not because prices never rose before. They have always moved. What changed is how much of modern life is automated, recurring, financed, and fixed. Your ancestors could run out of money, but they did not have 30 different companies quietly returning every month to collect a small piece of their income. Modern bills do not wait for your attention. They pool. Rent pools, insurance pools, subscriptions pool, loans pool, utilities pool, apps pool. The money leaves before it becomes a decision. That changes how a salary feels. You do not experience the full paycheck. You experience the remainder. And the remainder is often already tired. This is why a raise can disappear so quickly. A raise sounds like extra money, but life often treats it like available space. A better apartment, a safer car, a nicer grocery store, more convenient food, 1 or 2 subscriptions that feel harmless, a gym membership, a payment plan, a weekend trip because you have been working hard. None of these things are evil. Most of them are understandable and even reasonable. That is what makes the trap subtle. Lifestyle creep rarely feels like greed. It actually feels like finally catching up. You're not trying to become reckless. You're trying to make life feel a little less cramped. And for a while, it works. The new place feels better. The newer car feels safer. The better food feels deserved. The monthly payment feels manageable. Then time passes. The upgrade becomes normal. The bill remains. This is how a raise turns into a new baseline. Not because people are stupid, because humans adapt. Psychologists call that hedonic adaptation. The feeling of improvement fades faster than the cost of improvement. The first month in the better apartment feels different. 12th month feels like home. But the rent still knows it is higher. That is the third hidden mechanism. Income raises once. Obligations repeat. A raise happens on a day. A bill returns every month. And repetition is more powerful than size. This is the same reason why subscriptions work. A single monthly charge rarely feels dangerous. It is too small to fear, too convenient to cancel, too familiar to question. But modern financial life is not built out of one subscription. It is built out of layers. Streaming, cloud storage, music, delivery memberships, apps, softwares, news, fitness, gaming, protection plans. Premium versions are things that used to be simpler. The monthly payment became the default shape of modern consumption. And that matters because a monthly payment changes how the brain sees price. $100 feels like $100. $10 a month feels like almost nothing. Until $10 a month becomes 20 different almost nothings. Then it becomes a system that makes income feel pre-spent. Debt does the same thing, but more quietly. The New York Fed reported that U.S. household debt reached $18.8 trillion in the first quarter of 2026. That number is almost too large to feel, so bring it down to the level of one person. A credit card minimum, a student loan, a car payment, a medical balance, a buy now, pay later installment. Each one is a promise from your future self, and when payday arrives, the future shows up to collect. This is why the paycheck can feel strange. It looks like income, but part of it already belongs to decisions made months or years ago. Debt turns old spending into current pressure. Subscriptions turn old signups into current pressure. Housing turns old lease decisions into current pressure. Lifestyle creep turns old upgrades into current pressure. And inflation turns the same life into a more expensive version of itself. By the time the paycheck lands, it is not really arriving into an empty room. It is arriving into a room full of hands. That is the deeper reversal. The problem is not always that people are worse with money than before. The problem is that modern money has become better at claiming them. Better at turning wants into payments. Better at turning payments into routines. Better at turning routines into baselines. And better at hiding the full cost until later. That doesn't mean personal choice doesn't matter. They do. But choices happen inside systems. And the modern system is built to make every dollar feel available in pieces. Pay a little now, subscribe for a month, finance the rest. Upgrade today, cancel anytime. Start free, try premium. Split into 4. The language is soft, the math is not. This is why so many people open their banking app and feel confused. They do not see one disaster. They see a normal life. Nothing looks outrageous. No single purchase explains the pressure. No single bill tells the whole story. And that makes the stress feel personal. Maybe I'm bad with money. Maybe I should be doing better. Maybe everyone else figured this out. But often, what you're seeing is not one bad decision. It is the architecture of modern financial life. A salary enters, fixed cost takes the first bite, debt takes the second, recurring payments take the third, inflation makes every bite larger, and whatever remains has to become savings, fun, emergencies, generosity, ambitions, and peace of mind. No wonder it feels small. A salary is supposed to pay for life, but more and more, it feels like it is paying for the right to keep standing still. This is the most unsettling part. People are not always chasing luxury. Many are chasing the old version of normal. A home that used to be reachable, a grocery bill that used to feel ordinary, a car repair that used to be annoying instead of frightening, a weekend that did not require financial strategy, a raise that actually felt like a raise. And this is where the title changes meaning. Your salary feels smaller every year, not only because prices rise. It feels smaller because the distance between earning money and feeling free has grown. Money used to become possibility. Now it often becomes maintenance. Maintaining the apartment, the car, the credit score, the subscription, the version of life you already built. That is why earning more does not always feel like moving forward. Sometimes it only lets you stay in place at a higher price. The paycheck is bigger, the room is smaller. And the strangest part is that everyone can be telling the truth at the same time. The employer can say the wages went up. The government can say inflation is a percentage. The landlord can say costs increased. The bank can say the payment is dual. The company can say the subscription is only a few dollars more. And you can still feel like something is wrong. Because your life is not lived in averages. It is lived in the gap between what comes in and what must go out. That gap is where freedom lives. And when the gap shrinks, the salary shrinks with it. Not on paper, in your body. In your decisions, in the pause before you say yes to dinner, in the feeling you get before opening your banking app, in the way a small unexpected expense can ruin an entire week. That is what people mean when they say money doesn't go as far anymore. They're not only talking about prices, they're talking about room. Room to choose, room to recover, room to be human without every decision becoming financial. Maybe that is the real measure of a salary. Not the number, not the title, not the raise, but how much life is still yours after the world has taken its share. Your salary did not simply get smaller. The world around it learned how to take pieces of it before you ever got to feel the whole thing.